Okay, so hi again. This is the active position. I just made a position in Sensex. As you can see, I have shorted puts, deep in the money puts. Um, as per the charts, I'm expecting it to break the 20 MA and move up. But before doing that, it might test some patience. So this is where it opened. Market opened a slight gap down, made a wick from top, made a wick from down, and it's trading in between right now. I'm expecting that it will break and move at least to 26 180. If that happens, this position should give me profits. Start of the day, I'm not going to take a very big risk here, but let's see how the positions react. So I have two strike prices, 86,000 put which I've shorted, and 86,500 put. Let me just have a look at the chart here. Okay, right now it's forming a green candle. If it starts moving above this zone, then it might get tricky. And if it breaks 979, then we might see a gap filling, but let's see what exactly happens. Right now it is too early to say how this is going to turn out, and today might be a day where I might have to take some adjustments. We have Sensex expiry tomorrow. Looking at the premiums, 85,000 put is at 228, markets are at 84,900. So this is the intrinsic value should be around 90 for this. Rest all is time value, so I'm expecting this will get adjusted. And let's even have a look at some calls. 85 5,000 Sensex calls. Look, calls are trading a bit cheaper, even though they're out the money, but still it's like at 167. So these two premiums might get adjusted. So we just have to wait and watch here. Let's see what happens, and I'll keep you guys updated because this is going to take some time. So I don't want the video getting too long. I'll keep you guys updated. So this is the current status of my position. As you can see, it's moved heavily against me. All right, I'm still holding the trades. I took an adjustment here wherein I purchased 85,000 put and I squared off the trade as well with 11,000 gain. So that much loss has been managed. My view is still the same. I still feel that markets will take a bounce, probably not exactly from this level, but from 26,090 levels. So let me just show you the chart. Okay, so if you have a look at the chart here, look at this particular zone that I have drawn this about 2 to 3 days back. This is a virgin CPR. All right, so what happens is whenever markets test a virgin CPR or spend time there for like a few minutes, then there is a high chance that markets reverse. So this basically is a reversal zone. I'm expecting a good reversal from here, and I'm expecting that markets will at least test this 20 EMA, okay, and test the CPR, which is at 26,191. It is a high possibility that this might happen today because we have Sensex expiry tomorrow. So look, people, let me explain you the logic. People who are holding puts overnight, they might have booked during the opening. All right, puts premium are already spiked up, calls are a bit cheaper. Given that we saw a bounce here and again there was a fall, again a second attempt, again a fall. So most people right now will be interested in the put side, and if I didn't have this zone marked, I probably would be interested in the put side as well. But for now, I'm going to trust my studies and my zone, and I'm just going to hold the trade, and we'll see what happens. If markets start going below 26,078, even 1 5 minute candle, then I might have to close my position in a loss. But until then, I'm going to keep this trade on a hold, and let's see if I get some more adjustments that I can make. I'll even take those. As you can see, I just took 200 quantities short. I have not shorted with my full quantity. If I wanted to, I could have shorted with 400 500 quantities total, but you can see I've just taken 200 quantities. And the reason was this, because I wanted to have keep my loss in a limit in case the trade moves against me. And it's easier to manage your losses when they are small, and you'll make smaller losses if your quantities are small. If your quantities are big and the trade moves against you, it's going to multiply that much faster. All right, so again, this is going to take some time. I'll be back. You can have a look at the positions again. Look, it's active, it's running. If I show you here, we have sellers at 1592, price is showing 1588. So this is still, against me compared to the price which is showing as well, 97, and here it's at 98, 99. So let's see guys, patience and more patience, and we'll see if patience rewards us today. And again, this is the reason I tell you, option selling is not as easy as people make it. They say that, oh, option selling is easy money. No, it isn't easy money. It's difficult, it's tricky, because even option sellers get trapped, and the return is always limited when you do option selling. So look, one more reason why I shorted the option is, in my experience, put options, when they start decaying, right, they fall very fast. Look at this, for example. Here, this put option was at 1300. Markets took support, started moving on top, and just look at the meltdown in this put option. It was so fast, so rapid. All right, and here also the put option took a bounce from 359 levels, okay, and it has gone all the way up to 1000. So let us say big institutions who bought also at this particular price, they are getting a really good price here. And tomorrow is expiry. So why will an institution take a risk of holding this for tomorrow expiry day? The chances are very less. I feel that maybe it might spend some time in this zone, and then we might see a good meltdown. All right, maybe at least until 820, 700. Let's see what happens. I'm keeping a hold on this, and this is an even deeper in the money put which I've sold. So you'll see a similar chart structure for this. Okay, so here's the update on the position. I closed the position at 10:15, about 40 minutes back. I was on a call, so couldn't post the video. Uh, but yeah, as you can see, so today's day, just to summarize, what I did was, let's go to Nifty here. On this particular candle, the second candle, I had made an entry. The charts here, so it's better to understand. Okay, so look, this is the upstock charts. I made an entry here on the second green candle, thinking that it will break the 20 EMA and move forward. The reason I made the trade here was because this was a strong green candle, and I didn't expect a complete red bullish candle, bearish candle, sorry, covering the entire green candle. So that's the reason I took a bullish trade here. I had sold put options in the money Sensex put options, and then losses started appearing from the second red candle here. I kept on holding to the trade. Even at this zone, I was still holding on to the trade. In fact, when this particular red candle was forming, that was when I made an adjustment. So the second trade that I took was an adjustment. You can see 85,000 put I have purchased at 229, and I have covered the position at 240. So quick scalp, 11,000 quick gain. And again, this was not made with the intention of profit. This was just made with the intention of managing the loss that I was seeing in the ongoing put right trade. And after that, I just kept holding on to the position. So you can see from 9:43 all the way to 10:15, I was sitting for almost half an hour more, and I made this position at 9:21 in the morning. So I've held on to this position for almost an hour, and finally I've closed all the positions. So this was the adjustment one where I made 11,000, and these were the two main positions where again combined gain was close to 11,000. And these, what you see negative small ones, these were all hedges. So total gain for the day 22,174. I won't be trading further today. The reason is the first trade that I took, it troubled me. It didn't go as per my expectation, and I have swung from a negative running PNL to a positive running PNL and close the day positive. So I don't want to risk further and go back down to positive and keep fighting, because for me, what I have observed is on days where you take your first trade and it doesn't go in your favor, those days it's better to just, if you're in profits in the second or third trade, it's better to just close the day, and then you always get another trading day, right? Why risk on the same day? Because that day is clearly giving you an indication that okay, what you're thinking and what the market movement is not aligning on that particular day. So it's better not to risk more, and it's better to just protect your gains, protect what you have. So that's it for today. This was how again, and you have seen today how difficult option selling actually is. So it gets tricky, it's not always easy, it gets tricky. If I show you the premium now, look, the premium has bounced back again. So I covered the position here in this wick, all right, and from there again the premium has bounced back. So if I kept holding on to this, I would still see losses. So covering your position is also very important, and the logic for covering was very simple. I covered it here when the price broke 20 EMA and moved towards the CPR, the pivot. Look, again the price test pivot, and from there it's taken a rejection, and now it's trading sideways within the 20 EMA range. So anyways, that was it for today. I hope you learned something new, and I'll see you again in the next one. Bye bye.